Hey everyone. Today, May 14th, 2025, day in the markets that was kind of just meh. I didn't really see a lot that I liked. There was a few opportunities for those who are potential scalpers or like to trade level to level, but unlike yesterday's moves, it was very much a compressed consolidation, not a lot to speak of on large moves. In my experience, this is completely normal after an extensive and impulsive move up or down in the market. A lot of times you see price move hard and then it consolidates before it makes up its decision if it wants to retrace and regain some of that ground or if it wants to continue moving further. A lot of this can depend on market news, events, things like that. But this is the kind of day I would expect after a large move that we had based on what I've seen. So I'm going to cover a couple of trades that I would have taken in this, and kind of go over some trades that you potentially could have taken based on a few, of your own reasons and maybe your plan. But mostly the SPY and the ES, the S&P 500 had the best opportunity for trades based on what I would take. Although there was one decent opportunity on the NQ, I'm going to start with here. So I'm actually going to jump over to the 5-minute chart and let's talk about this one trade on the NQ that I liked. So, first, before we dive into the trade, we look at the Tokyo, the Asian sessions, and the London session. We had a bit of a, it's not a clean run up in the Asian session, but we were definitely on a bit of an uptrend with a hard push down as soon as London opened. This to me is indecision. We did break the Asian low in the London session. A lot of times when we break one direction, we do tend to go to break the other, and we did that in this case. However, this is definitely earlier than I trade, so I would not have taken part in any of this. But this nice little sweep below, followed by some bullish action, might have been a great opportunity, but that's not the one I was talking about. The trade I'm talking about was right in the middle of the New York session. Now, me personally, I would have been done trading by now. I normally stop trading at 10 a.m. Eastern. Anything after that, I'm not always a fan of. I like to get my trading done in the first hour to hour and a half of the day. For me, I'm Mountain Time. That's roughly about 6 a.m., maybe to 7:30 to 8, give or take, right? So about a 2-hour window at the most. But it's this trade right here, this move down. I'm going to go ahead and remove the sessions here because we're not worried about those at this point. What we're going to look at is a short off of this level here. Now, this specific trade, it wasn't pretty. It did play, and depending on your reason for trading, this may or may not have worked for you. I'm going to actually go ahead and bump this down one more to the 1 minute. And let's take a look at why I personally would have considered this trade. Now, we're in the middle of the day at this point. What are we? We're at 12:30 at this point right here. So right after the market opened, we shot down, up, down. Like there's just a lot of indecision here. But one thing that I do like to look at, and I apologize, I am going to pull this up one more time, is the New York session, right? So this was the London high. This is the New York high we got to, which is where I would have taken my trade. But if we look at the London high, we had this large, aggressive, impulsive push down. However, we only got so far before price just got nasty, as I would call it, right? So we had this big push, and then price just barcoded to the right. Now, what I look at here is if I was still watching to take a trade, this barcoding kind of ended. We had another hard push down, but if you notice, it failed to create a new low. And then we have this retracement action back up. And I call it retracement because it's not impulsive. A lot of up, down, up, down, up, down, up, down, right? Green, red. It's Christmas all over through here. But then what I notice is this candle. If we were to look at this candle right here, oh, I'm not sure why you didn't go. If we were to look at this candle, it's because of the color. Let's make it white. All right, so if we look at this candle that pushed up, this is the high of the London session. We pushed into that candle and twice and failed to get any higher. Then we pulled back down, still failed to make a new low. So, going short at this point would not have been on the table. But what I see is a strong impulsive push above this candle. We swept the London highs. But what happened after that? We swept the London highs. Well, we didn't try to go beyond that. Well, we did, but we failed. and then we failed again and again. At any point, you could have hopped in here with your stop somewhere above this level and aimed for the lows somewhere. Now, me personally, being how hard we've failed at pushing lower, I probably wouldn't have tried to go any lower than this. As you can see, we did fail to capture the low of day in the New York session, but this trade was beautiful. Not in the best circumstances of a trading day to take it, but if you were trading in Q, one contract, that would have been a $300 risk for a $2,300 reward. That's a 7-to-1 ratio, a little over 7-to-1. It would have been a beautiful trade to take on a risk level. Outside of that, not an A plus because of the market conditions, in my opinion. Now, that being said, this was the only trade on the NQ that day that I saw worth taking on the futures. However, I think that the ES, the S&P 500, did provide a little bit more opportunity. So I'm going to turn this back on. We're going to jump back over to the 15-minute. And let me reset my view here. And I'm going to talk about what I saw on ES. Now, as you can see, the results are pretty much the same on the higher time frame. Strong push up, consolidation, and we consolidated all day. We barely produced any new lows, and we did not produce but one new high that failed to produce any more. So we're going to bump this down to the 5-minute here, and let's talk about the trades I would have taken on ES. Now, we can see London high was pretty much at this wick before the initial push up, but there are two trades I would have considered here, and it is actually not the sweep. So let me remove this for visual reference. The sweep I'm talking about is right here. I would not have necessarily taken this one. That one would have been a clean trade for some, but just something about this indecision this morning, the failed to get high. You know, we pushed it and made a new high. We made a new low, but that was within like a consolidation range. But then this push up failed hard, right? This could have been a good trade, but I had a lot of reasons to consider that this might not continue to play out, which it kind of did not. But it would not have been a bad scalp. No, the trade that I personally really liked was a buy from this level here. Now, this level right here would have been a great little scalp. However, it did not play out. My target probably would have been here. However, I might have gotten out at some of these points. You can see we kept failing to go higher. May have even gotten out down here. And to be completely honest, I would not have risked that. I wouldn't be trading on the 5 minutes. My risk would have been much tighter. My risk probably would have been an entry of about here, and my stop, yeah, probably would have been about there. Now, the reason I would have taken this trade is consolidation, impulsive move, and reaction in the opposite direction. This is what I call a sweep, a nice sweep. I personally probably would have jumped in on this green candle and set my low here and aimed for this high. So I wouldn't have got it. That was about a 4-to-1. I probably would have gotten somewhere around, I'm just going to call it a 3. Probably would have held to here. This is not impulsive down, so I would have held. But around somewhere in these red candles, I probably would have gotten out. Keep that in mind. And on ES, let's see what that would have gotten us. With one contract, I would have been risking about $325, and I would have made somewhere in the realm of $900 to $1,000 on that trade. To me, this is a B plus setup, mostly because of market conditions and the way the market is trading. However, the second trade I would have taken is actually in the opposite direction. So let's actually talk about that if I can get this thing to go. There we go. Let's just say I got out there. The second trade I would have taken would have been this short. Now, I am not afraid to swap directions. Having a bias is good, but also having a bias can be bad. Now, in this case, the reason I would have taken this trade is my original trade did not play out. It didn't play out to my target. we pushed high and then we failed, right? We didn't clearly create a new low, but then we pushed and made a new high, which is, promising for continuation. But then if you look at this price action, it kept just fighting and fighting. But this sold me. We had an impulsive push up to this high again. We actually got barely above it. This is still a sweep. It's a small one, but right there, I personally would have said, hey, you know what? It's a choppy day. I'm going to play this level to level and I'm going to play it back down here. I probably would have gotten in somewhere around here on this next red confirmation candle, and I would have been targeting my previous low. And if you look, it did play out. This was a 6.5 to 1 roughly. And if I had taken the trade, this would have net me about a $1,200 profit with about a $200 risk. I probably would have had my stop up here about right there. So all in all, in my opinion, those were the better trades of the day. The one in NQ was not bad. So I'm going to keep it pretty simple. There wasn't much else to talk about today, but I am going to go ahead and swap this over to our options trading and kind of cover those same two trades. I would not have traded the Qs on today. I would not have traded SPX today, given the market conditions and what I was seeing. But on the buy, we're looking at the SPY here. So I would have traded SPY contracts. And on this same buy on the S&P that I was talking about, I probably would have gotten in somewhere around here. We're talking about $100 buy-in per contract. And by the time I got out, that contract probably would have been somewhere around $192 for a net profit of $92. Not bad. We're talking about 100% increase on the contract value. If I had bought in 5 of them, that's $500. Not bad at all. I definitely would have swung at that. Same thing with this trade coming down. I probably would have gotten in somewhere over here. Same thing, about $80 to $90, give or take. And then by the time this played out, this was the much better trade. We are talking about almost a 250% return on those contracts. This was a hard push down. On the S&P, we created the new low, right? It was a nice push. My target would have been roughly somewhere in here, so I probably would have gotten about a 220% return. These two trades, in my opinion, were B setups given the market conditions today, but clear movements, clear sweeps, rejections of levels, these are the kind of things that me as a day trader or scalper like to see. I'm not necessarily a big fan of consolidation, but I can tell you what you can expect in consolidation, and that is level-to-level trading. The problem is knowing when and if we're going to get there, because in consolidation, anything can happen, and the whole point of consolidation is buyers and sellers arguing over the price before the price goes to where the winner is going to take it, and that can be up or down. Nobody knows. If you say you know, you're probably just guessing, and let's be real, it's all a guess when it comes to that because people with bigger wallets make these decisions. But yeah, that being said, this is all I have to cover today. If you do want to know more, if you have any questions, put a comment on the video, give me a like and subscribe if you don't mind. This is my personal channel talking about my way of trading and looking back and how I back test trading. So yeah, thank you for stopping by. You have a great day and we'll talk to you tomorrow.